Michael Preiss, the Chief Investment Officer at Global CIO Office as well, Raynard Johnson right now. Michael, good having you. Thanks much for taking the time out.
Yes, good morning.
Good morning to you. It's not turning out to be a good morning, unfortunately, but what do you do in such a scenario wherein you are waking up every single day to bad press and bad ticks on the exchanges?
Yeah, look, I think it's important to step back a little bit and get a bigger appreciation of what's going on. I mean, and don't forget, look, I think the market structure is changing. I mean, if you think about it, for the last 10 years, since the 2008 crisis, it was always a buying a dip market. Now, increasingly, what we have seen in the last few days in this very sharp and volatile sell-off was it's becoming a sell the rallies market. And the real question is whether central banks are now losing control, because the coronavirus is something that monetary policy and more stimulus doesn't solve. And that's the realization why everybody's now freaking out and why there's panic in the markets, because this can't be fixed by just more money injections into the economy. And the other question is, look, nobody knows how long this will last.
Yeah, I wrote a piece and somebody was talking about it as well, Michael, that maybe there are triggers, but do we know what those triggers are in the first place? And when do they get triggered in order to bring about a bit of stability, the kind of manic fall that we've seen?
Yeah, look, I mean, think about it. I mean, even the president of the United States became a cheerleader for the stock market, right? And always talking up the stock market against a market that was historically be expensive or potentially overvalued, depends on how you look at these things. And now, secondly, you have an environment where corporate earnings most probably will disappoint more than anybody ever priced in as an assumption. So now you have a readjustment process going on where a lot of these models don't make sense anymore. Also, with the U.S. Treasuries at these levels, a lot of pension funds might have a funding problem. So this is suddenly becoming a systemic issue, and that's why also the central banks are now going into overdrive. The only problem is, have they overused their stimulus so far that we've gotten to this point? Again, the higher you rise, the more you fall.
Yeah, and that's a fair point. A lot of assumptions, a lot of con calls which are throwing up numbers which might show of an earnings degrowth in various large economies. Michael, my question is, as and when this eventually settles, would the markets make a distinction between economies and markets which might show some growth, or for the near term it's nearly impossible to predict that money will come back into risky assets anytime in the near term?
Yeah, look, I think it comes back to this question of value investing. You remember, value investing was out of favor, but I think going forward, balance sheet strength matters. And don't forget, a lot of this stock market rally in the United States last year was by corporate share buybacks. So companies buying back shares with cheap debt, right, because rates came down so much. That increasingly means that debt levels are high, and that always meant you need to have a strong economy. If you suddenly have a recession, a lot of these things will materially reprice. And that's exactly what we're seeing now. I think that repricing isn't done yet. I think we might even get to a stage where the United States might actually, as an emergency measure, shut the stock market to get people some time to actually figure this out.